Good afternoon, ladies and gentlemen, dear participants of the forum. My name is Andrey Sharonov, and I represent the Moscow Management School of Skolkovo. And today, at the offer of the organizers, I will moderate the next plenary discussion. Our plenary discussion is titled "The Top of FinTech as Viewed by Foreign and National Visionaries." So, the colleagues that you see at the podium are not just speakers, they are visionaries as well. I would like to introduce the participants: David Birch, Director of Innovation, Consult Hyperion; Osama Bedier, the founder and CEO of the company named Poynt; Alexey Marey, Vice Chairman of the Board of Alfa Bank; Karl Tlais, Senior Director for Innovation and Strategic Partnership at Visa; Hugh Harper, Head of Practice Strategy, Clients Operations at Ernst & Young; and Oliver Hughes, Chairman of the Board, Tinkoff Bank. Yes, let's welcome them. Okay, thank you. We've reached an agreement with the participants that our main objective now, or end of the session, will be to be as interesting as possible to the audience, and hopefully we'll have time and you will have the opportunity to ask questions of our participants. The key technologies and the key technology trends on the financial market can be broken down into three key areas. Anything that is related to consumers, anything that is associated with the development of siloed sectors, and finally, it's the ratio between the banks and the financial technology sectors, the FinTech companies. The consumers are primarily technologies and services that make the interactions between the customer and the financial services seamless and invisible. We are creating this so-called seamless technology for getting financial services for the development of certain sectors. A very good analysis of this subject was made at the previous Davos forum, where all of the key technology trends were named in great detail, and maybe we'll touch upon this today. And finally, it's the change of the ratio between the banks and the FinTech companies, the transition towards cooperation. We'll talk about that as well. We will talk about where we have cooperation, where we have competition. We will talk about the creation of new internet protocols and new platforms, and the move towards the open banking. And I would like to invite our panelists to do the following during their speeches. And in fact, they're not going to be monologues. They're going to be dialogues more than anything else. And I would like to invite them to pay attention to the key financial trends on the market, on the cost of the digital transformation for the industry, what is needed to create the new generation of the bank, the forecast for the development of the FinTech, the vision of the reality. What are going to be the forecasts? What forecasts have not materialized? And this is something we would also like to discuss with our speakers: the development of financial technologies and the next plans and perspectives and prospects. And of course, the relationship with the regulators. We have here the representatives of other jurisdictions that work with their regulators, and we would be really helpful to you for your recommendations for the Russian regulator. And so we are beginning, and I would like to invite David Birch to take the floor. He's the Director of Innovation from Consult Hyperion. And in fact, we have a very good mix of speakers. We have two bankers representing the banking sector, Alfa Bank and Tinkoff Bank. We have two consultants representing Consult Hyperion, David Birch and Hugh Harper from Ernst & Young. We also have a representative of the global payment system. It's Visa in this case. And we also have the founder of a startup company, a FinTech company that provides FinTech services. And therefore, we will take a look at this issue from all of the angles. So I give you David Birch, who represents the company Consult Hyperion. It's a company that specializes in mobile technology cases, ID technologies, contactless payments, NFC, EMV, and other technologies that are now prevailing on the market of finance. Please, David, you get the floor, and I would like you to say a few words about what's new in the area of technology there is, what is the behavior of the regulators, including the British regulator, and whether you see any bubbles that are about to burst, or do you see any hype in the area of technological innovation on the financial market? Any companies, areas which are overrated from the standpoint of their capitalization assessment and the hopes the customers have for that. The floor is yours.
Thank you very much, Andrey, and thank you again for the very flattering invitation to come here to talk with everybody.
Keep closer to the microphone, please.
Closer. Okay, how is that better? Yeah, okay. So if we look at the regulatory situation first, if the regulatory situation in the United Kingdom is helpful to people here formulating regulatory strategies, the reason that the UK is so interesting in this area at the moment is because in the UK we have two regulatory pushes for open banking which are coming together at the same time. So we have the European regulation, PSD2, Payment Services Directive, which I'm sure the regulators here are very familiar with, and it's very fashionable to criticize European regulation, especially in the United Kingdom. It's very fashionable to criticize European regulation, but PSD2 is a very sensible way forward, and I think it's a useful template for regulators in other areas because it begins to separate the regulation of systemically risky credit institutions from the regulation of the systemically less risky payment institutions and allows for innovation in the payment space without the restricting regulation associated with other parts of banking. And at the same time, because of other regulations, we have the ring fencing of the investment banking institutions at the same time. So the thrust there is to stop regulating banking as one thing and begin to regulate credit institutions, payment institutions, and investment institutions separately. And personally, I think this is a good way forward. At the same time, the UK regulators, after many, many years of consultation, were very concerned that there was a lack of competition in the UK banking sector and that the rents extracted from the market by the leading, I don't want to use the word oligarchic, that might be inappropriate, but a small group of big banks were essentially taking too much from the market, not creating enough innovation. And so through competition regulation, the regulators decided to force the banks to provide open APIs for third parties to use. This is in advance of the European PSD2 and strong customer authentication regulation. So from January, the 9 biggest banks in the UK have to provide open APIs in 2 categories, which broadly correspond to the account information servicing provisions of PSD2 and the payment initiation service provisions of PSD2. So to take a simple example.
David, sorry, let me interrupt you. Is it compulsory or it's a goodwill from these 9 banks?
No, it's compulsory. In fact, if you want to experiment with the APIs, you can already go to GitHub. That's for the younger people in the audience. That's to show that I'm trendy and I know what's going on. You can go to GitHub and you can download the APIs now and begin to experiment with them. And so broadly speaking, come next year, if you're a company, Amazon or somebody, you can come to me and you can say, hey, Dave, we don't want to bother those nice people at Visa and MasterCard because they're very busy processing all those transactions. So instead, why don't you just let us access your bank account, and in return you will have an extra month of Prime or something, and most people like me will say okay. And then next time I go to pay Amazon, Amazon will go to my bank account and instruct a credit transfer. Remember the UK's new payments architecture, so the regulators in the UK have put in place a new architecture for payments, which will begin in 2021, which will move everything to credit transfers. There'll be no debit transfers at all. So we're moving to this open API-based approach. We're moving to it very soon. It's a fantastic experiment. I think it will succeed in one way, in the sense that it will create more competition and create new services for customers, and that's a great thing, okay? Because who knows what customers will want in a year, 2 years, 5 years' time. And I agree with what Brett said this morning. There are other people out there that can create these new interfaces, these new experiences. We don't need the banks to do that. We need them to do other things. Where I probably disagree slightly with some people is I'm unconvinced that it will lead to competition in the banking sector. The idea that we call them challenger banks, the idea that lots of new challenger banks will come along, that's not clear to me, because the challenger banks as we have them now are essentially too similar to the incumbent banks. They have the same core banking systems, the same software, they have the same products, the same services. They're not different enough, so they just become niche players in the banking system. Whereas the open APIs allow other people to take advantage of this, as Osama and I were discussing this before. So if the bank has to open its API, who is it that has the resources to come along and take advantage of that API and build some fantastic new services? Is it, you know, some guy in a basement with a new idea? Maybe. But it's much more likely to be Amazon, Microsoft, Apple, Google, Facebook. Now for customers, that can lead to fantastic new services, but I think it does bring some concerns for the banking system, because if the banking system loses control of the customer relationships, if you spend your whole time in Facebook or vContact, and when you want to send money to a friend or pay for something, you do it inside vContact or inside Twitter or inside Messenger or inside WeChat, and you never interact with the bank, that has potential problems for the banks. And I don't want to tread on what Hugh's going to say later on, but if the banks don't have the data coming in from those customer interactions, which is actually what we see in China, if we look at the case studies of Alipay and WeChat, if the banks are starved of that consumer data, it's very difficult for them to feed their machine learning, AI, supercomputers to deliver better risk management and all these other services. So it has a concern. But as an example, the UK is a fantastic place to experiment. The regulators are very committed to seeing more competition in a more efficient banking sector, and I'm sure the regulators here have studied the concept of the regulatory sandbox, which has proved very popular. So good news, I think, from the regulation front, and a good reason to study what's going on in the UK. If it comes to hype and FinTech hype, I will make one comment about this, which is some of the things I've read about blockchain. I mean, I know it's very fashionable and everybody is in favor of the blockchain and we all want the blockchain to succeed. But I've been reading newspaper headlines and magazine articles, I've been listening to people at conferences telling me that the blockchain is going to solve world poverty, it's going to end world hunger, it's going to bring democracy to every corner of the world. I even read somewhere it's going to help fight fires. I mean, there's nothing the blockchain can't do. And this simply cannot be true. So the insanity in the blockchain space has to be reined in. And if I was to make one suggestion, it might be there are aspects of the shared ledger approach which are much more interesting than cryptocurrency. And those are things like transparency and consensus and integrity. And that suggests to me that one way to see it in a more realistic context would be to begin to look at blockchain as a regtech rather than as a fintech. In other words, not as something that companies are going to use to deliver particular products and services, but more as a market infrastructure which will reduce the costs of regulating markets and make them more efficient and become a key element in jurisdictional competition for financial services. So I'm very excited about the blockchain. I think it's fantastic in the right context. I'm not sure it's going to rescue cats that are stuck in trees, but who knows? We'll look at some other websites for that. So I hope that's a realistic view.
Yes, thank you, Dave. Just one more question. Could you tell about the typical mistakes, if you could, which banks make during the introduction the new financial technologies?
Well, but my experiences are with, you can tell because I'm old, so my experiences are with the large, the incumbent, the legacy banks. And I'm very reluctant to blame them for the mistakes because you have to understand the dynamics in that system. A typical large European bank might have an IT budget of, let's say, roughly 2 billion euros approximately. So someone like UBS would be spending about 2 billion euros a year on IT. But 90% of that spending goes on maintaining the legacy infrastructure, the existing branch banking systems, the ATM networks, and so on. That means even a big bank like that has maybe 200 million euros to spend on new technology each year. And 90% of that spending will go on regulatory and compliance. This is why productivity in the finance sector is steadily declining. And it's not even a question of money. That means a tiny fraction of the IT budget can go on new products and services. But it also means a tiny fraction of the brain power, the imagination, the creativity inside a bank is going to these new products and services, because most of the creativity is about how we deal with MiFID, how we deal with capital requirements, how we deal with the new reporting requirements, how we deal with the new KYC requirements, in particular, how we deal with the new I don't want to talk about the new anti-money laundering directive because I'm convinced it's an almost complete waste of time and money. But you're not. It's unfashionable to say this. But yes, the banks have had problems introducing these new, and they were slow to begin moving towards mobile and so on. But I understand why that is. For the guys that I work for, the amount of money and creativity that's available for new products and services is very limited. Most of it has to go on the existing legacy infrastructure and the existing regulation and compliance. If we can use technologies like blockchain to make compliance easier, to move away from traditional ideas of accounting and auditing and more towards these environments of what people call ambient accountability, we can radically reduce the expenditures there, and then that will free up the banks to be more creative. So I understand the criticism of the banks, but I would defend them slightly because I understand the dynamics too.
Thank you, David. Далее я хочу... Да, спасибо.
Thank you. And now I would like to give the floor to Hugh Harper, the head of the Strategic Partnership Group at Ernst & Young. This is one of the big four consulting companies in the world. It studies FinTech companies and the role of FinTechs on the markets, and they have a very unique research product. This is EY FinTech Adoption Index, which measures the level of adoption of FinTech at various markets in various countries of the world. And the 2017 index has shown that the implementation of FinTech has reached the level of 30%. That's across 20 markets. In 2015, that number was just 16%, and the leader in adopting financial technologies is China. 69% of the respondents that were active users of digital technologies, they use the FinTech solutions regularly. Thank you. And please, the floor is yours, Hugh.
Я прошу в том числе...
And I kindly ask you to mention which forecasts have not been brought into life as for the development of FinTech market. Thank you.
Thank you very much, Andrey, and thank you for asking me here. This is an awesome forum. I can assure you, there is nothing like this in the UK of this scale in one place at one time. It is amazing. So congratulations to all of you, and for doing this 3 times. It's a great privilege to be here. Andrey just mentioned our FinTech Adoption Index, and he's absolutely right. Since 2016, it has increased to 33% in terms of adoption across the world, and China is the leader. And actually a lot of emerging markets are the fastest growing, not exclusively, but a lot of emerging markets. There's a couple of things going on there, and there's multiple complex drivers. Some of that is regulation. Some of that is leapfrogging the evolution of markets in lesser developed markets. Some of it actually is my mum. Now, my mum is 83. Actually, this week she's bedbound, but she's doing her banking on an iPad at home. I know that because I keep on getting an email asking me why I haven't paid her. Now, the point is that my mother at 83 actually is of a generation that when she retired, she'd already learned how to use email. She had already worked in an automated office context. And so, in fact, what we now have over the course of the last decade is the wealthiest generation, the 55 to 85-year-olds. They have retired, but they are economically and technologically adept at a totally different level to prior generations. And it's very easy to spend our time talking about the millennials and the young, but the value in banking and the value in insurance is actually in the affluent and the elder segments. And those segments are truly engaging. The other thing going on is that actually digital adoption is now no longer an issue. Digital adoption is massive, and mobile has driven it into every home, every pocket across the world, and every playground of every child. So those things are going on as well behind this. But even more importantly, around it, you were saying what has happened, what hasn't happened. As Brett was talking about, customer experience has come of age. And the quality of mobile apps, mobile experiences, customer journeys over the course of the last 6 years has transformed, absolutely transformed. And that has driven further adoption. And you've got some great players in Russia who demonstrate that. So customer experience has driven it. Unfortunately, with customer experience, however, has not happened the reliable automation and growing efficiency of the system. So what I now have is a vast number of clients around the world who spent several $billion, in fact tens of $billions, on their digital transformation for the last 10 years. And they're all saying, where the heck's the value? Where actually is the value? Because the value has flowed generally to the customer, or it's flowed to the digital consultants, but it hasn't flowed frequently to the shareholder. And that's the other thing that we now see happening, and I think will be the number one trend driving adoption and change over the next 5 years, is a focus amongst the major institutions on digital and automation, and FinTech in particular, driving efficiency and capital optimization. So yes, it's about customers, without doubt, but it's the end-to-end improvement of efficiency and capital optimization to get back to growth and to get back to sustainable ROEs, which is really driving most of the major digital transformation programs. So why haven't these programs been delivered? And David just sort of touched on some of this. We're seeing numerous reasons for why these programs aren't delivering. And number one is many institutions are just trying to do too much. They've got multiple hackathons going on. They've got 999 digital initiatives going on. And I kid you not, I know a major institution which has a 900 action point digital transformation program. They can't execute that scale of change simultaneously. They don't have enough money or management bandwidth or programmers or data scientists to do it. So that is driving to my next prediction for the next few years, which is a fundamental refocus on how people are going about digital and FinTech, rationalizing to the programs which really matter to customers, really drive better regulation, compliance, control, and really are driving value in the institutions. Because the current programs generally in major institutions are just too big. And in fact, frankly, they're introducing risk into the system on a daily basis. The other barriers are kind of get more interesting, more technical. Data is a major barrier, and we know about data strategies, architectures, all the rest of it. The key point about data for me is, first of all, that data is dirty. And most of the data scientists are coming up with amazing ideas, fantastic, valuable ideas. But actually, most of the major financial systems have got services and processes have got dirty data. And there's a real technical limit as to how much value you can get out of dirty data. In old school electronic engineering, this is a signal to noise ratio. If the noise is too high in the data, you're never going to get to the deep insight inside it. So there are many great ideas. Too many of them are inoperable in terms of insight or in terms of your ability to operationalize them in the institution. The other thing which is a major barrier has been compliance. And I don't mean actually the regulator here. What I do mean is internal compliance and control functions. Frequently, regulators in the UK, across the world, have been very supportive, very straightforward, and very helpful. But the problem is that most compliance functions across the world are still populated with old school, manual processing-based thinking and policies for implementation. The idea that you're going to test something on a statistical basis, that you're going to use sampling, machine learning, etc., they don't get it. I know a FinTech at the moment which is being held back from an implementation of one of the major investment banks because the internal compliance guys just don't get that a black box that does machine learning is a reliable way to test a particular risk issue. So actually helping internal compliance and control to understand compliance and control in the new world is a crucial barrier that has to be addressed. And let me just turn to what I think is going to happen and is going to work going forward. David, I'm with you about blockchain. I think it's the biggest piece of hype ever, but I do believe there are some really interesting applications now starting to come forward. The test and learn process is starting to evidence some really good, very areas where we're seeing the combination of blockchain bringing efficiency, improved trust in complex supply chains. For instance, you'll have seen an announcement where Maersk is working with a FinTech called Gartime and a couple of other players to actually bring blockchain into the shipping container market. And why are they doing that? They're actually doing that to eliminate insurance premiums because they are massively over-insured. So by combining blockchain, smart contracts, their Internet of Things, which tracks just about every container in the world that Maersk is carrying, and if you know Maersk, they're carrying most of the containers in the world, they are able to actually fundamentally rationalize that supply chain and use blockchain as a platform to bring that in, and it really works. We're seeing similar movements starting to take place in the pharmaceutical supply chain, the agrochemical supply chain, and so on. And frequently, I think this is one of the most interesting trends, is the best ideas we're seeing in financial technology are convergence. It's where we've got old school industries and complex problems coming together with smart fintechs and financial institutions to drive totally new value into the economy and into the system. That, I think, convergence will be the new phrase. And then I think we are going to see then two other problems which are going to rear their heads. Let me talk about the positives first. Voice. I'm not going to talk about voice because Brett talked about it earlier. I really believe that voice is going to change the world because the intuitive nature of working with voice devices like Alexa, consumers really do like when they're used to it, and the quality is really good. Voice, I believe, is coming through very fast. I'm even seeing this happening in trading room environments, where the quality of voice is good enough almost to go back to the old days of hail and holler boxes. So that's really interesting. Machine learning and AI, big hype. For me, the interesting things, though, aren't the obvious things. It's not in the risk pricing and so on, where the quants would take this to. It's actually in operations. Using AI to better plan call centers, to better route inquiries, to better identify AML situations. Those situations where you have multivariate complex data problems linked to data to operational problems, AI is actually showing itself to be a very, very effective tool. It's just not very sexy, but it is very, very effective.
Hugh, time?
Time, sorry. Well, let me just close up. One last thought. So the killer app, I do believe, is the same thing that Brett got to earlier, and that's focus, and it's partnership. We have to simplify and focus what we're trying to do as institutions, and we have to work in partnership. It is crazy to work with 150 different fintechs. Far more important to work with a single fintech to drive to scale and to really enable banks to accelerate and for the fintech to succeed. So that, for me, is the killer app over the next 5 years. Focus and partnership. Thank you.
Thank you, Hugh, and just a small question to you. You work with emerging markets mainly, and please give some insights on the good and bad cases experience among national stories and probably some recommendations to the regulator. That's a common question I will ask each participant.
I'm very happy with that. Look, we see the best FinTech centers being about capital, talent, demand, and policy. And actually, in terms of a center, your regulator is doing a lot of work on all of that. What I'm most interested about is the regulators who are really intervening to get to deal with the common problems of building infrastructure. Because it's very easy. I see this in London. We've got lots of great things going on, but the banks are really struggling where we have to get utilities built in the marketplace and to actually cooperate. So for instance, building a KYC platform has been talked about in the UK now for a decade. We still have got no further than a pilot. And I do believe those sorts of interventions by the regulator are very, very effective. The other side of this is where regulators are able to help on two key problems. One is clarity. It's that issue of helping compliance folk interpret without taking excess risk. How do you get them over the risk barrier? And the other one's data ethics. Over the horizon, we are seeing the problem of data ethics arise. It's not just about data privacy and GDPR. It's actually, can I use my wife's data to credit score me? What do we do about latent data being collected in the marketplace, which I never knew had been taken from somewhere? What do I do about black data taken from the dark web, which has been rebranded and sold to me as white data and used to credit score you? So we have multiple issues on data ethics which are coming up. Consumers aren't really aware of them. Regulators aren't really aware of them. And I think this is like the world of embryology and GM food. If we don't have a clear set of data principles which enable us to invest effectively in new technologies and their application, there's a real problem that adverse policy, and I would actually put GDPR in that case, a highly expensive, futile exercise. It's a real problem with that the regulation actually stops us in our tracks doing something great with data for consumers and for the economy.
Thank you, Hugh. Moving further, Alexey Marey, заместитель председателя правления Альфа-банка.
And we are turning to Alexey Marey, and he is deputy chairman of the board of directors of Alfa Bank. He is one of the leaders of digital banking in Russia. In April 2017, it was ranked 4th in the rating of the best internet banking. And also in Alfa Bank, since 2013 up to now, they've had Alfa Lab department that was developing this digital trend, and it was transformed. And I wanted to ask Alexey about that, and I'd like to recall that yesterday it was announced that Alfa Digital had been established. I learned about it from Oleg Tinkoff post and imagined that he's very glad that now they have a very good, a decent competitor, even before Vedomosti newspaper announced that on the market. So what has happened with Alfa Lab, and what is the strategy of the group that is establishing a new trend? Will that be competing?
Thank you, Andrey. Let me start. Can you get closer to the microphone? Let me tell you the story of Alfa Lab. We need to remember about 2012, the year when we launched this. And we discussed this today as well. When we change very stable and stable from the inside organizations is quite hard. This transformation is hard. You have to wait until they become unstable and unsuccessful, right? Well, unfortunately, we have such examples on the market, but that's not us. Well, it's not a matter of money, because today they are asking this question, how much digital transformation costs? It's not something that can only be solved by money. This would be too easy an exercise. This is a matter of culture. This is how people interact with each other. This is a matter of business processes. This is a matter of a human conscience, whether it is attuned to anything that is forward-looking. So the idea of Alfa Lab is something that was born out of the need to reorganize our space, our business processes from the inside, and restructure our interactions cultures within the organization. And from that standpoint, we were successful because we succeeded in doing that. And what happened this year, what happened last summer, was that we exported this culture to the larger bank. It is impossible to change the large bank overnight. I don't believe in such revolutions. Well, they may happen, of course, but the chance of success is very variable in that case, and along the way you spill a lot of blood. So we chose a different path forward. We were able to show a lot of good and successful models in the large organization that we represent now. The businesses are united, are combined. Our colleagues in the industry criticized this. They said that there are some minuses to what we do, and maybe we should share with you some of the lessons learned. Not everything was easy and smooth. The first lesson learned was that when you call something, that has a tendency to sort of decouple from the rest, and that happened in our case. We used to have Alfa Lab inside, and then we had Alfa Bank. For clients, we are perceived as one organization, and we have to be one organization, and the clients had different experience in digital and in the offline operations. And Oleg today, when he commented on launches that we had when we would navigate our clients from online to offline, and vice versa. There are some areas where we don't need offline at all. Clients still come to the offices in our country. People, and Olga Dergunova spoke about this, they like to come to business offices, and that's surprising. But a lot of customers come to the office because they want to look the teller in the eye, despite the presence of the technologies. So right now we've amalgamated Alfa Lab and the current business. We've changed how we operate our current business, and we understand that we use the new architectural, technological, cultural processes. We will operate differently. People will just interact differently and operate differently. In addition to this, I would like to say that our organization is still quite successful. We're still very big. We've built a huge small business portion of what we do, and in terms of growth rate, we are bank number 2. We can actually say, in terms of the number of clients among the small business owners, we are number 2 in the country. But that's not my point. The point I'm trying to drive home is that if we look at where we're going, at how we need to change, we still will have to deal with the problem of legacy systems. There will still be the problem of the rate of change, and this rate of change may not be fast enough. That means we may not be unsuccessful in 1 year's time or 2 years' time. We may be unsuccessful in 5 years' time. And if we start today, we need to take advantage of the technologies that didn't exist 10 years ago, and we need to take a look at things differently. And therefore, we came up with this idea. And that is very much in line with how one of our classics said, do not read the newspapers at lunch. So the newspapers do not describe what is happening. We're not talking about the setup of a separate bank or separate company that will be working on a standalone basis and would develop retail products primarily. Or maybe, alternatively, there would be several such companies. Maybe we will launch a number of services guided by the things that were mentioned earlier, the principles of open banking, or getting ready for implementing this principle of open banking. There will be several niche players who would be dealing with the specific problems and needs of our clients in those niche markets. Maybe a huge bank will not grow out of these small niche players, or investment bank will not grow out of them, but it is quite possible that there will be several services in existence that will exist and would stand side by side, will be helping, solving very specific issues that are specific to a specific group of clients. And that is why we believe that any bank that is growing, becoming a large bank, it is too big not to notice those niches, and it is imprudent to disregard these markets and lose money on that. And if we talk about the future, we can talk about a cloud of services under a single brand. They, of course, will be interacting with the regulator in the regulatory field, but each of those services would have their own niche or they would either supplement and complement each other, or would even be competing with each other. Because we definitely consider ourselves to be big, but for the entire banking system, we're just over 5%. So if we're competing with ourselves, that means we still have 95% of the market left open. And from that standpoint, Alfa has always been the bank that acts always in the interest of the market and follows the market principles. Thank you, Alexey. So you made a conscious decision to compete within the group. You are not afraid of cannibalization, and you understand under what conditions you are working. Well, let's say there is a parallel team that comes up with a service that is in more demand. That is what we already have in Alfa Bank, and people will start flocking there. That would mean that this service is not going to be in demand just by the clients of Alfa Bank. And from that standpoint, we could look at the example of Tesco's RBS. They had the same principle. We will definitely be using the principle of open architecture, which is underpinned by competition. We'll be, of course, learning from each other, but you cannot launch a market player and tell the market player not to compete with a specific instance of your own company, but compete with everyone else. The market doesn't work like that. Okay, thank you very much. And there was a question about the advice to a regulator. I wrote down this answer for myself. I would like to speak about it. We mentioned this earlier. Today, the regulator is faced with a huge conflict of interest because they wear two hats, the regulator and the owner. And today we've been talking about open competition. I think the regulator should remain regulator primarily. Although we do understand and realize that in this situation where our regulator is finding itself now over the last 2 months, this borderline between the two hats is kind of blurred. So I would still advise the regulator to stay regulator. And as for the issues of shareholding and everything else, that's something that should be done and dealt with by those that are put in charge of this. Well, thank you very much. This session reminds me of a genre that I would call a meeting with the electorate. Basically, we are just telling the regulator what the real workers of the financial market players do. And just recently, I took part in a roundtable discussion that was on this subject, and several people spoke about this. They said that maybe the government should be doing the bank resolution, not the central bank. That was an interesting suggestion made by the financial institutions to avoid this conflict of interest. And now I would like to give the floor to Osama Bedier. He is the founder, and he is also the CEO of a FinTech startup called Poynt. The company was founded in 2013. It is dealing with the development of the very first, well, I don't know why it says here first, the very first smart payment terminal and the platform for open trade of the future. Please, Osama, tell us about your product and tell us in that regard, do you cooperate with the banks or do you want to displace them?
Sorry. Very nice to be here. Thank you for having me.
Keep closer to the mic.
Sure. Very nice to be here, and thank you for having me. So I'll start about our product. Our view of the world is that retail technology is very backwards, and the way to fix it is partnering with the banks to put out not just a payment terminal, but a full-fledged computer on every countertop, and use that computer to free the data, the transactional data on the device, and make it available to third-party development. We believe that will create a lot of innovation in the retail space, but most importantly, create a new revenue source from third-party innovation, a new model where technology companies do not have to compete with banks. I think there's a win-win-win solution. And then From a FinTech perspective, a few arguments I want to add to the equation. You know, I've always looked at FinTech a little differently than most people I talk to because of my background. I started at PayPal when it was 25 engineers, and it was 5 years later that somebody told us we were doing payments. We didn't actually know. We looked at it as providing consumer services. There was a problem in how people paid online, and we were solving that. We didn't think of ourselves as a payment business. And then another 5 years later, somebody told us we were in FinTech. And so my view of it has always been financial services is a technology business. In fact, if you look back in history, some of the most early uses of computing were in financial services. But then you look now, in the last 5 years, 10,000 new FinTech startups, more than all time before it. Why is that? Well, a few very important things. Access to technology, obviously, is an important one. Technology used to only be accessible because of its expense to a small few. Now it's very broadly accessible, and the best case of this is smartphones. If you think about smartphones, it's the first time in human history, 5,000 years of recorded history, that the consumer has more advanced technology in their pocket than every provider they visit, including financial services providers. And that's created a gigantic behavioral shift in how consumers see the world. There's this concept called learned helplessness. Raise your hand if you've ever heard of it. Okay, not too many people. Okay, thank you. So let me explain it then. And it's something we used to study a lot in the early days of PayPal, but it's the idea that if you went to the circus, circuses aren't around anymore, unfortunately, but if you went to the circus 50, 100 years ago, you would see an elephant, a gigantic elephant, tied at the ankle with a rope, very small rope, to a stake in the ground. And it wouldn't move. That would be enough to keep the elephant from moving around. And you would wonder, how is it that this gigantic elephant is held back by this rope? And it goes back to when the elephant was a baby. They would do the same thing, and the elephant would try to move, and it can't. And so it grows up believing that it can never actually break away. And so it never tries for the rest of its life. And so I look at consumers and financial services in the same way. For a long time, throughout history, consumers have had this learned helplessness with financial services. And then came the smartphone, and it educated a new class of consumers, a new generation of consumers, to think about this very different. And not just about financial services, but everything. And so we have a generation of consumers, millennials specifically, born in the internet age, understand nothing more than computing through a phone that's always connected, access to all kinds of data, and they're no longer willing to accept the answer or the service as provided. And when no one has solved it, they decide they will solve it. They learn the program and they'll fix it. And so it's a very different behavior. So they're willing to trust companies that have never had business in being in financial services before. That's how PayPal. In fact, PayPal doesn't sound like the most trustworthy place to put your money, but they put it there, or Alipay, or any of these new startups. It used to be banks only had that level of trust. They were also willing to pay for convenience. It used to be everyone's looking for the cheapest solution. This generation values their time more than anything else, so they're willing to pay more for convenience. And this has created a generation of folks that like to shop online, of course. But most importantly, it's created a usage economy as opposed to an ownership economy. If you look at this generation, they're willing to pay per use. They don't need to own everything. They're willing to not own a car and take Uber or Get or some other solution for transportation. In fact, there's now a startup in San Francisco that will rent you towels and bed sheets. And they're very successful because of this history. That has created the second most important thing I believe is happening in financial services, or FinTech, which is these consumers are leaving a gigantic data trail behind. Every interaction they do is leaving data. And I look at FinTech as primarily using computing to manage risk and operations at massive scale. And it's really the ability for cheap data analytics at massive scale to existing that startups are leveraging this data and cheap infrastructure to provide these services at a much lower cost. And it's creating a lot of healthy competition. Now, massive scale is the important part here, and a lot of people confuse data analytics for AI, which I think there's very little AI in the world happening. I think everybody's calling any data analytics AI, which is not true. There's a lot of data analytics, but true AI requires massive scale and especially a lot of historical data to analyze and learn from. And as a result, there's only really a few people on Earth doing true AI, and that is anyone who's amassing lots and lots of data. Today, the platforms. So my prediction for the future is that banks either become tech companies or they die. Or tech companies will move into banking at some level. But they always were tech companies, so that shouldn't change. It's the fact that they now need to be more competitive at doing it. Thank you.
Thank you, Osama. Tell us, please, your relationship with the regulator, your expectations, your barrier you face from the regulator's side, and the recommendation to the Russian regulator, please.
Sure. It's a love-hate relationship, as most startups have. But I would say it's also influenced by my history. It's interesting that my early days of PayPal was illegal in the US for 3 years. Most people don't know that. And it was the fact that we were illegal, but no one knew what to do with it. There was so much activity that everyone was afraid to touch it. And ultimately, the regulators decided to learn from it and let it survive because it was providing a valuable service. But also, as we expanded globally, we didn't have a similar experience. Obviously, less favorable environments in other parts of the world and a lot of blame to go around. But my view of this is that regulators should look at things not as change as bad, which is what historically has happened, but find the reason for why it is bad. I think regulators should protect consumers, and they should look at everything from that lens. So why is it bad for consumers? Why is it bad for the economy? Otherwise, figure out how to get out of the way. Because I think we're in an environment where innovation is going to happen rapidly, and you should watch it, learn from it, and not immediately shut it down, but learn why you should shut it down before you do so. There is, of course, a level of risk that's unacceptable. Regulation is important, especially in financial services, but you should figure out what that level is for letting things go before you start taking action.
Thank you, Osama. Движемся дальше. Я хочу попросить.
So we are moving forward, and now I'd like to pass the floor to Mr. Karl Tlais, Senior Director for Innovations and Strategic Partnership. Visa is one of the leading payment system, and it is actively involved in reconsidering its strategy for more innovative development. Mr. Karl, you are wearing the hat of the visionary. So how do you envision the future of international payment system? I mean the broader sense, not only your international payment system. How will they change? How will they migrate in the context of mobile payment and also the development of other platforms? So how do you envision the future of this institute and this infrastructure?
Yeah, look, I appreciate the time today being here, and a wonderful audience, obviously, and a really good representation. I guess it's a really broad question that you're asking, but if I assess it in terms of where we're going as an organisation, as a player in the payment network space, we're all about opening up, I guess, our engagement with fintechs, but also with the banking sector in a different way, which is all about leveraging VisaNet and our network, but through defined, I guess, API interactions. So when we look at what we're doing with many players here in the market and across many different markets, it's opening up access to our standard platform that we have. So right now, I guess, if I was to look at where the future is moving, a lot of the concepts that the guys have been talking about today in relation to mobile and digital transformation relies on us having an engaged approach. So to do that, we need to collaborate and we need to partner. So Visa, we have a very strong partnership focus right now, not only with fintechs, but also with entities which are evolving in many different spaces. So if I take an example we were talking about earlier around WeChat and the messaging platform, well, mobile in general has a very, I guess, direct touch point right now with most consumers. I mean, there's 5 billion mobile devices out there. If you think of the Internet of Things and the concept behind that, why not have everything that's connected a payment device or the ability for you to transact? So IoT, if you take that concept of a lot of the market research out there right now talking about 20 billion connected devices, well, we being a network, we need to have an ability to engage and to also connect to a lot of these upcoming devices that are coming through. We have defined programs as a network player, but I think most people are thinking about how and where do they open up that access. So in order to do that, you really need to define use cases and solve local problems or solve problems in that industry. One of the announcements we made today was around an innovation studio here in Moscow, for example, and that's really geared towards us helping the local market here solve problems and innovation-driven solutions to solve those problems. Taking a lot of the discussions, again, from this morning around human-centered design thinking principles, well, we have that capability, and we're investing a lot of our, not only internal training, but also our approach to working with our top-tier clients around solving problems using human-centered design thinking. So for us, it really is the transformation of us as a company towards that. Digital transformation is a very key part of supporting you as a financial sector and a community to get there. Yeah, and it is a baby steps approach, but you've got to start with solving, one problem at a time. And if we just go back to I guess the base point of where the touch points are happening, it's in the acceptance area. We as an organization are looking at acceptance as a big barrier towards, getting the consumer on board. The consumers are more tech savvy. The millennials are obviously entering the workforce and transforming that, but there is still that acceptance at the end point, which needs to be enhanced. And I guess for us, the mobile plays a big role there. But if you go even further beyond that, the up and coming themes around biometrics and the impact that's having on multiple sectors, some of the announcements that Apple have made around their device enablement around iris and facial recognition, supporting registration authentication on their devices. We need to make sure that as we partner, we're factoring in the future technology that's going to come through and support that. Underlying a lot of this also is trends, and whether they're bubbles or hyper bubbles around blockchain, we still have a strategy towards engagement with that sector who is evolving through the various different concepts around solving solutions using blockchain. So, blockchain, yes, can solve areas around supply chain, but we're experimenting around proof of concepts around, when you buy a car, for example, taking out the insurance and taking out a loan and then obviously doing the whole registration process behind it. So, for us, it's engagement, it's partnering, and it's making sure that we're part of that discussion. Some of the discussions happening around the PSD2 concept and its implementation, we're certainly making sure that we've got a strategy around understanding our role in engaging through this. But, I think concepts around, universal digital ID will end up coming through this equation as well. And how do we leverage, the biometric information that's there from individuals in order to, to connect your national ID, for example, information to allow you to make a payment and then leveraging that sort of concept. So, our innovation group has that sort of mandate to drive a lot of this, and we're we're looking at investigating how do we drive some of these areas across the board. And I think, again, as a payment network, this is where, you know, we have a lot of insights on consumer behavior. We have a lot of insights around our consumers, but also, you know, banks and issuers in general, you know, have obviously a lot of data insight which needs to be explored and shaped and designed in a way which adds value to the consumer and to that experience. And I think as we move along, you know, the next number of years to help you shape and digitize your strategy, we need to be conscious that, you know, there are those fintechs like WeChat which have come into maybe a localized market in China, and they've taken a good chunk of the local market in relation to digital transactions on mobile devices. And if you take the numbers, 90-odd% being Alipay and WeChat in China, well, I think that's going to evolve anyway into other markets, and we need to be ready for that. And I think, you know, we need to make sure that we're supporting you as you not only engage with the fintechs in various ways, but to leverage these unique opportunities to help the consumer move away from cash and move into the digital world, because they're seeking it, you know. And in the future, as the educated and the millennials travel, they're looking for those destinations which have that opportunity, you know, and we need to be ready for that. So us as Visa, we're opening our engagement to many different segments around this.
Thank you, Karl. And once again, the question for you: what is your recommendation, expectations, requests to the national regulator?
Look, I think regulator has a very important role to play here. I think for us, it's we're trying to support you in supporting the transition of the market towards digital payments. And I think that's what we want to try and drive. And I think for us, the more interaction we have, the more dialogue we have around those new technology solutions that are coming into the market that we're seeing. Examples of this, I mean, we have our innovation center in Dubai, which services 93 markets across EMEIA, but you know, I engage quite regularly with many different central banks and regulators, and a lot of the time when they see these up and coming trends and technologies in our innovation centers as proof of concepts, they're asking the question, which is, how do we help you take this to market within our markets? And I think for us, you know, regulator has a vital role to maintain the balance between innovation, technology transformation in that sector, but also, you know, protecting the rights of the consumer. And I think for us, as an ecosystem, we can work together to make that happen, and that's what we really want to do.
Thank you, Karl. It's very useful. Спасибо.
Thank you, and we continue. Now I would like to give the floor to Mr. Oliver Hughes, and he's the chairman of the board of Tinkoff Bank. So it's the main fintech. When you established your company, no one knew this word fintech, and you created this first fintech. So now the situation has changed. Everybody is using this buzzword, this fintech, and moving in this direction. So what is your vision about new opportunities and maybe new threats that you see on the market? Thank you very much for your question. Good afternoon, and thank you for having me here. Are we fintech or techfin? It's not clear yet. Technological financial provider, because fintech is an empty word, an empty phrase. I don't understand what it means. When we launched our project more than 10 years ago, we didn't have such a phrase, such a word as fintech. And I listened very attentively to what Alexey mentioned, and we respect Alfa Bank and Alexey personally. And the situation that was described by Alexey is a problem of a classical bank, because Alfa Bank is a classical bank plus, without any irony here. It's also a recommendation to the regulator to pay attention to that, right? Yes, in a good sense. So how do we transform, actually? Alfa Bank has made the right decision to establish a new structure, a new department, because these changes are coming from the inside. From the outside, it cannot be successful, and it has been proven by many cases in Russia and abroad, and I will tell you why is it like that. In principle, what I want to tell you, it's relevant for the Russian context, because we are a TechFin player. We are one of the few players, maybe most advanced player, but of course we have some existential issues and challenges because the world is changing. If I could say that there were 12, 15 advanced players maybe some years ago, now we have other large players. Some of them are smaller players. We do, but we are growing. But what are we doing in order to grow successfully? I just recalled that some time ago we were living in the conditions of the blue bankers. Now we have 6, 7, maybe 8 great players, the largest ones. And I'm talking about the locomotives of the industry. In order to survive and in order to thrive in 5, 7, 10 years, what is to be done? What are we doing? We are building a financial ecosystem. What is it like? It is a system where we engage more and more consumers. I mean, primarily consumer loans and small businesses, retail business. And we retain those clients inside the system. We are selling more and more. We are increasing loyalty and scale. You cannot be a small player in the future. We can have niche players, but you should be a large player. And unfortunately, the size does matter. And the further we go, the more it matters. And we see our consumers in the following paradigm. So what needs do they have? It's not about product-centered, it's client-centered approach. So what are the needs? For example, family banking, as we call it. And some things, for example, something related to housing and utility payments, also traveling, educations, and some other aspects of life, house, car. So we look at that through this paradigm, and we should build ecosystem around those needs and interests of our customers. And we see that other financial organizations are not coping with these tasks. They do not, it is not clear yet who has survived in this process. But as for the future, in 5 years, the competitors that we used to have 5 years ago, we will not see them in the future. And what will the future competitors be like in this ecosystem? We have 5 to 6 million clients, but we will have from 10 to 20 million clients, and it will be a different scale. It will be a change in a scale, and bank experience difficulties today. Why? Because they are between the so-called strategic seizures. Because on the one hand, there will be other players entering their grounds, and the so-called, what we have already mentioned, financial and technological players, Amazon, Google, Facebook, Apple, and some other companies, also including Chinese big players that have IT platform, and they have data, they have interface, they know how to work with customers, and they have the necessary scale, because the scale is the king here. It is on the one hand what we will see in the future, and on the other hand, so in the Russian context, we will see large state banks that have the necessary scale due to their natural advantages that they have been using in Russia, and they have the ecosystem effect thanks to the scale. But to compete here, you have to use your interface, to use data effectively, to use state-of-the-art technologies, the machine learning in order to increase the efficiency of your organizations, the biometric data in order to improve client experience and ensure safety, and front end in classical sense, mobile, internet, banking, the chats, messengers. These are the tools that help you to interact with your clients. So that is how we will be developing in a future, and the life will be very interesting.
That's a very good forecast. Thank you, Oliver. Based on what you said, I understand that you do not consider yourself a niche player, but one of the managers of the large state bank said that she regards you as a niche player. And it's good that you are there, and it's good that you are such an icebreaker that would take upon itself all of the risks associated with innovation, would make all of the mistakes, and would help the market penetrate into this market. Are you a niche player or not a niche player in your perception? Of course, we are very small, even still. But do you think if you have 5 or 6 million clients, you're still a niche bank or a niche player? I mean, we have 5-6 million clients. We have 100 to 150,000 small business clients, which grew over a year, as mentioned by Oleg during the first session. We have 3 million clients that have consumer loans, and that's a fairly large customer base, and we have seen good growth dynamics. Alex said we are the largest independent online bank in the world, and that's not a niche player. Although we're not huge yet, which is a good thing, because it gives us agility. We are agile, and so we are still prepared to make mistakes from which other players could learn. And go ahead, please be my guests. That's part of our approach, test and learn. We experiment, we analyze, we understand what works, what doesn't, and what works we will then scale up. What you need to understand about Tinkoff is that we are a platform. It's very important to understand we are a financial platform. We sell our own products on our balance sheet, and we also sell partners' products which are not on our balance sheet. It's not a niche. Thank you. That's a very interesting conclusion you made, and I would like you to end your speech by your recommendations and your expectations for the regulator, please. Well, I'm not going to be a regional today, but I do have a very respectful request. Please treasure competition. Of course, we compete. Colleagues here compete. And we feel fine now, but it's getting difficult to compete because the share of the government is growing. It's already large, and there's nothing good in that because some of the government players, state players, maybe not entirely consciously, or maybe quite consciously, are beginning to leverage the resources that they have access to so that they could compete not on an equal basis. This is something that was non-existent 2, 3, 4 years ago. I couldn't say that then. Now I can, and this is sad. And when you mentioned that they have certain natural advantages, I thought you were talking about that, and I thought that, well, they are not natural. You probably understand what I mean. Thank you very much. We are very disciplined, and we made the time. We have a few moments for questions from the audience. We have some people in the audience. They are volunteers. They would give you a microphone for you to ask your question. And please make it a question, not a speech. Are there any people that want to ask a question to the participants? And volunteers, please raise your hands and attract attention to yourselves. Okay, now you can see who they are. Are there any askers? Any questions? I don't see any. Well, if that is the case, then let us consider that our visionaries... can I ask a question? Yes, we have a question. Where are you? Okay, I can see you. I'm here. I have a question for Alexey. Could you introduce Denis Seridenko from Compass Plus company? I have a question for Alexey and Oliver primarily. It is a question about the Russian markets. Do you believe that the total domination of one of the large banks on the B2B transfers markets, a natural monopoly that Oliver alluded to, and do you see any steps that the regulator could take in order to deal with this monopoly situation, if you really believe it is a monopoly situation? Please, in the interest of time, I can say very shortly, we do believe that is the case, and we do see what you are saying. That's very laconic. I thought you were going to say everything well, but I think you've said it all. This is probably the subject for the next session, but nonetheless, I believe, let us sell the tickets to the 15:30 session, the 3:30 p.m. session. This is a very important subject. There is a draft, or rather, there is a project to launch a system, a federal system of fast payments, fast retail payments, or faster payments as they're known in other countries. This is a very important element of the infrastructure for the nation. It is going to be conducive to the development of the FinTech services business, which is very good, which is something that will attract the customers into the FinTech ecosystem. It will reduce the number of cash-based operations. The very final part I wanted to bring up is that this is something that will allow us to stand up against this giant. Thank you very much. Are there any other questions in the audience? I see none. I would like to thank the participants of this discussion for your insights, your opinions. We're not always agreeing with each other, but I think it is a good recipe for a good session. Thank you very much.